Hey there, YouTube family. This is Josh with Stocks with Josh, and this is the Small Account Challenge update for Verb. That's where we're taking $200 to $400 in an extremely bearish market, looking each week at the technicals and the fundamentals. We're charting it out to see where the best price to get in and out of the stock is. If you are new to the page, hit that subscribe. Family, hit the like and check in the comments section. And if you're not in the Small Account Challenge, in the description of this video is a link to moomoo. Download that. Put $200 in. What we're trying to do is we're trying to build up a new account from $200 ultimately to $2,000, because what we want to do in the long term is we want to get geared up to short this market. You know, some people believe we might be in the recession. We've pulled back. We're definitely in a correction. We are dabbling on the line of a crash, but there's a lot that would indicate that this market is not going to go right into a recession right now. There is probably a strong opportunity that we're going to get back to some not all-time highs, but we're going to be moving up before we enter into that recession. That's what I believe. So we're getting ready. We're building an account up so ultimately we could take advantage and short the market. A lot of retail investors get in after they've been hearing about all the money that's been made in the market. The market's been going up for the last 10 years, and a lot of people are just brand new to investing right now. And oftentimes what's happening is by the time they get drawn in, the smart money, as they say, begins to sell off their position to the retail investors, right? You've got to be positioned to make money when the market goes up or goes down. And that's what we're trying to do with the Small Account Challenge. And we're going to build it up and we're going to short this market in the recession. So last week, Verb's earnings came out and they were a miss. The earnings per share and the revenue per share missed expectation, and yet the stock popped. I talk to you guys about this all the time, right? So it's the shorting, right? This stock has been short. It's been beat down. We're well below the mean. And what a shorter has to do to cash in their profits, which has been made on this stock, they have to purchase the stock. So initially, when they short the stock, they're borrowing it from the exchange. But ultimately, when they want to close their position, they have to buy the stock. So sometimes when a company has the worst news on the worst day, you'll see it turn around. Now the fundamentals and the technicals for Verb, there are positives in there, but we also may have seen that pop in the stock for simply that reason, right? But we're going to look at the technicals together. So we've been following along this trend line right here from the very beginning, right? We saw that we broke through that when the markets got extremely volatile, and it was quite likely, like we had in the past where we broke through it, we came back above, right? And most of the time when it breaks back into a channel, it needs to come back and test the channel before it can move up. And I'm expecting that here. We may move up a little bit more, but at some point we want to have it come back and test this channel. Some of you would say right then and there, well, if I'm up on my shares, then I should immediately sell it if we're going to come back. You guys, we're going to stick to the plan. Right now we're holding $200 worth of Verb at around 430 shares. We don't want to readily get out of it because we're going to get caught unexpected. This thing could pop and it'll get away from us, right? So we want to take it level by level. We just have to, if it goes down, we have to not panic. So let's look at the next bit of charts. Okay, so this is the Gaussian Channel. I've talked with you guys about this quite a bit. I want to point out some things with you. I talked to you about how there is compression and expansion. So I want to go back in this period of time, 2 times where you see really strong compression. It always leads to a kind of a violent expansion. That's where the stock popped. And again, you see this really narrowing compression, and then it leads ultimately to a strong expansion. Now, compression can lead to it going down or up. But I want to point out to you guys, we have right now on the Gaussian Channel some of the strongest compression that I've seen in its history. You can see even here where it had widened up, okay, and eventually it narrowed and compressed. It ultimately led to the stock shooting back up. So I'm keeping a close eye on the compression that I see in the Gaussian channel. Also, one of the other dynamics is whenever a stock tends to leave the Gaussian channel and go beneath it or above it, it always, kind of wants to come back to the mean and come back into it, right? We have been on the outside of it for quite a while, and we are at the point we've acquired our stock here when we're looking to sell it in this zone. That's our basic target. Let's look now at the Fib bands. I know the Fib bands are a bit more complicated for some of you, but I'm just going to keep it really simple. You've got these inner bands and these outer bands, okay? And right now we broke to the outside of the furthest outside lower band, which again, when it tends to break out, right, it tends to move back into the channel. It'll have resistance at this line, the first white line, and we see that. It came up to it, it kind of rejected. What I'm expecting is for it to move along that line. If we get a break above that line, it will then push us to the second line, right? And that's going to bring us to around 70 to 80 cents, just that move alone. So that's what we're looking for there. So we talked in the past about the RSI, Relative Strength Index, and I told you guys before that we had bullish divergence, okay? I need to kind of remind everybody what bullish divergence is. Basically, in a nutshell, the RSI measures momentum, okay? And as it goes further down on the scale, it means that the momentum of sellers are piling on, and there's more and more sellers pushing it lower and lower. Okay, but when the price goes lower, but the RSI goes up, it means that there are fewer sellers pushing the price down, and that's called bullish divergence. So that's what we had here until we had that really bearish day in which everything just sort of broke down, okay? But we have come back up, back into this channel that I've been identifying, and we're curving over, all right? That's a little bit of a signal that we're getting that weakness. What we want to see is for it to come back and test this level here, right, which would be a higher level of selling pressure, okay? So we want to see it come back basically and not go down as far as it had before. And this would be another confirmation of our bullish divergence. That's what we're looking at on the daily RSI. Okay, now these are the simple moving averages. And I know that these technicals are new for a lot of you, right? And this is really just meant to give you exposure to them, to just help you begin to understand how they're used, how I'm using them from week to week. This is going to help. I know for some of you, you might be, I think I'm going to turn this off now. But the technicals are not scary. And I'm telling you that if you guys follow me on this journey, you're going to become more and more comfortable with them. Okay, so we're looking at the simple moving average 10, 20, 50, 100, and 200. Each of these colored lines represents one of these moving averages. The orange line, whenever it's on top, like we see right here, that's when the stock is going up, right? Whenever it's on the bottom, that's when the stock is going down. So we saw a crossover, and that's what we're looking for in simple moving averages. We're looking for the crossover. So the day that this yellow line began to cross over the other moving averages, that was a strong indication that the stock was no longer going to go up. When we're using the simple moving average, what we want to see it do is we want to see it bounce off of the next moving average. We don't want to see it cross over. But now that we're in that bearish zone, we're wanting to see it cross over to the upside, which would be a huge buy signal for this stock. So right now, I want to point out a little bit, whenever these lines fan out to the downside, that is a bearish indicator. I mean, normally when these things crossed over back here, when this yellow line crossed over here and these began to fan out, that was the indication to short the stock, right? We got in really right about here, okay? And we're expecting that this is the reversal that we're looking for, that this line is going to cross over. It's going to cross back over. Guys, I'm going to clean this up. We're going to get that crossover here of this orange line over the rest of these, right? And that's going to be a signal of a reversal to the downside. just to point out where we're at. Okay, so we've talked about our sell prices being 98 cents and $1.18. Right at this moment, the 50-day would be around 73 cents and the 200-day would be around $1.16. I'm not going to have you guys adjust your sell prices just yet. We're going to, but this is how I determine what our sell prices should be. This is one of the factors. So I think that those prices will come up a little bit as this begins to turn, and we'll talk about what they should be. I will give it to you in the weekly updates, and I'll also tell you in the community tab on my page. So let's look at the earnings report. I just wanted to highlight that they missed by 28.5% on earnings per share, and they missed on 12% by revenue. And even though that really sounds terrible, in truth, it wasn't as bad of a percentage miss as they have in the past. And so that also was bullish. They're getting better in not, we would have loved, this thing probably would have hit $1, $2 if they had actually beat expectations, but they didn't. Probably the smart money and the analysts who are very close to this company knew that they hadn't. The CEO's goal was to show improvement, which he showed, and that's partly why we saw that bounce. Okay, let's talk about who's investing in this company, right? This is actually one of the most important things that we need to be always looking at, right? So in this time frame that the company's been selling off, Geode Capital Management grew its position in Verb by 40%. GSA Capital Partners purchased a new position during the third quarter by $50K. And this is the big boy that really originally got me to start watching watching Verb. It was BlackRock's investment, okay? So they grew their position in Verb Technology by 710%. And so here's what they do, right? I mean, there are analysts whose job it is at BlackRock to identify potential companies like Verb, and they take a small starter position and they watch it very, very closely. Well, BlackRock has been increasing their position, and in this last quarter, they increased it by the highest percentage yet, going up 700% in their increase. If Verb begins to do some of the things that they say they're going to do, it would take nothing because of the low float on this stock. This is why this stock ran up to $45 in its past, because it would take nothing for these large investment firms to put in just millions, not even tens of millions, but just really what would be small for their level of investment to move this stock up $2, $3, and $4. That's why those price targets exist, is because of the opportunity for this stock to fly through larger capital investments. So Millennial Management brought in $500,000, and the Bank of New York Mellon put in $250,000 in the third quarter. So as a side note, just under 10% of the stock is currently owned by institutional investors. The point is that this is absolutely on their radar. Okay, I want to talk about some bearish things. We know that the technicals have not been giving us a buy signal. This has actually been moving more towards the neutral with the recent upswing. S.A.C's investment downgraded Verb from a buy to a hold. We need to be aware of that. The previous consensus of earnings was $3.41, and the new consensus of a price target for the stock is $2.91. The analysts are still calling it a strong buy. But we also have that's not all the analysts. There's different analysts that I'm looking at. And two other analysts have moved their average 12-month price target for Verb is $3.38 with a high price target of $4.50, and the low is $2.25. All of that is way more than we need to make the profit that we're making. I've said it to you guys many times. This is one of many trade setups. We're simply using this one to learn technicals, fundamentals, and to make a little bit of money. So that's where we're at right now. Let me I wanted to give you guys a price breakdown. Okay. So I get the question a lot, Josh, should I be buying more? Okay, we are on support right now at 49 cents. If we break that, we're going to see support at 36 cents and then support at 30 cents. And so the answer to that is be patient, okay? We're only going to consider buying more once we've confirmed that we know what the bottom is. Once we've come back and tested the support that we drew, we want to make sure that we don't break out of that again. We want to make sure that it honors that and then begins to move up. We're at a critical point in the trade. I think that we have seen bottom. Double bottoms are possible, but right now, if you wanted to increase your position, the best way of doing it is what we talk about a lot of times, which is just daily dollar cost averaging. If you wanted to put in $5 more a day, then that would be the best way of doing it. We're not going to do a lump sum investment. If you put a lump sum in and the stock drops to one of these other support levels, you're going to ruin your great average price. Okay, that's it in a nutshell, guys. I will keep you updated on this. We'll look at it again next week. One of the other things that people keep asking me is the trailing stop loss. When are we going to put that back on? I'm not able to communicate to everybody. I can communicate, but people are not getting the notifications in YouTube. And so I don't want to be having you put it on, taking it off, or adjusting the price, and half of you miss it and you get out of the trade and you lose money. It's not worth doing. The way that we're going to use the trailing stop is going to be really cool. When we get up to $1, we get up to that 80-cent range, right where it looks like we're going to break out. We're going to have the opportunity to put in a trailing stop, okay, which means that we're going to let it run above. But if it then comes below back to our 89 to 98 cents, it'll then sell. But if it runs up to $1.20, we'll be able to continue with the stock. If it's on a tear up, we don't want to sell it early, right? So that's how we're going to use the trailing stop. We're going to use it as a way of locking in our profits when we get to the higher end of our range. So hey guys, I hope that helped you. Thank you guys for letting me be part of your financial journey. Hit that like, that subscribe, and that notification bell, and I look forward to seeing all of you in the next video.